Imagine sending money overseas and it arrives in seconds, not days. No $30 remittance fee, no slow banks, just instant global value transfer. That's the promise behind next-generation payment networks, and today we're exploring a scenario shaking up finance conversations in 2026. What if a crypto-friendly Federal Reserve leadership met next-gen payment tech like Ripple? Recently, speculation and discussions have surged around the possibility of Kevin Warsh, a former Federal Reserve governor, returning to lead the Fed, and what that could mean for digital assets, blockchain payments, and the future of global finance. Today's video isn't hype, it's pattern recognition. We're breaking down the connections, the history, and the potential impact on markets and investors. Let's dive in. Part 1. The original vision: central banks plus blockchain. To understand today's conversation, we go back more than a decade. In 2014, a Street Lewis Federal Reserve economist discussed a future where central banks wouldn't disappear, but instead coexist with faster digital payment networks. The idea was simple: low-cost global transfers, currency-agnostic payment layers, real-time settlement instead of slow bank rails. Back then, platforms like Ripple were being explored as tools, not threats to traditional finance. Fast forward to today, and blockchain-based payment systems are no longer experiments. They're being tested, piloted, and debated across the world's largest financial institutions. And that sets the stage for the leadership question. Part 2. Kevin Warsh. Why markets are watching him. Kevin Warsh isn't a new name in economics. He served on the Federal Reserve Board during one of the most intense financial crises in history, the 2008 meltdown. His background includes Federal Reserve Governor from 2006 to 2011, White House Economic Policy Advisor, Morgan Stanley Investment Banking experience, Economic Research Fellow and University Lecturer, work with major macro investors and global financial leaders. Warsh has often spoken about innovation, productivity, and the importance of technological change in economic growth. And what makes analysts pay attention today is his openness to discussing crypto as a signal, not necessarily a replacement for traditional financial systems. Part 3. The crypto connection. One of Warsh's most talked about moments came from an early exposure to Bitcoin through Silicon Valley leaders. He's described digital assets as a form of policy feedback, a market signal showing confidence or concern in traditional financial decisions. In other words, crypto isn't necessarily replacing central banks. It could act as a mirror reflecting trust in the system. And when you zoom out, you see overlapping networks between venture capital firms, early fintech innovators, blockchain payment developers, global technology investors. Many of the same circles that helped build Web 2 infrastructure are now heavily involved in financial technology evolution. Part 4. Ripple and central bank discussions. Ripple has spent years positioning itself not as an anti-bank technology, but as infrastructure. Their focus has been cross-border payments, liquidity solutions, faster settlements between financial institutions. Across the world, central banks have experimented with faster payment systems, from the UK to Brazil to the Middle East. And as the US explores real-time payment frameworks like FedNow, analysts naturally ask, could blockchain-based liquidity layers eventually integrate into traditional financial rails? There's no confirmation, only speculation, but the conversation itself shows how fast the financial world is evolving. Part 5. Why investors are paying attention. Here's where things get interesting. A future Fed leadership open to technology, combined with global pressure for faster payments, plus the rise of tokenized finance, could create a completely new financial landscape. Potential shifts investors watch include faster settlement systems, digital asset infrastructure growth, expansion of cross-border payment tech, AI-driven productivity impacting inflation models, tokenization of traditional financial assets. Whether bullish or cautious, the direction is clear. Finance is becoming faster, more digital, and more programmable. Part 6. Reality check. What's still uncertain? Before anyone yells, "Moon mission," let's stay grounded. Right now, leadership appointments are speculative discussions. Regulatory environments are still evolving. Crypto adoption varies widely across governments. Institutional pilots don't guarantee full deployment. The financial system moves slowly, even when innovation moves fast. So think of this moment as a transition phase, not a final outcome. The big question. So here's the real takeaway. We're watching a potential convergence between traditional monetary policy and next-generation financial technology. Whether it happens fast, slowly, or differently than expected, the direction of global finance is clearly shifting. Now I want to hear from you. Do you think future Fed leadership will embrace blockchain innovation? Could faster payment rails reshape global finance? And what role do you see crypto playing over the next decade? Drop your thoughts below. If you enjoyed this deep dive, smash like, subscribe for daily financial breakdowns, and share this video with someone who wants to stay ahead of the curve. Thanks for watching, and I'll see you in the next one.